Hey, this is Danielle, and today I'm going to be talking about AMD ahead of earnings, which is going to be tomorrow after the close. Now, AMD is going to be a really important company reporting this week, arguably one of the most important tech companies on the docket. We have AMD, Amazon, and Apple all reporting this week. Now, we've had some various results with the semiconductor companies that have already reported. And when you're looking at SMH overall, it's very strong. You can see that the semiconductor ETF has made a new all time high. It actually just happened again yet today. And when you look at the overall price targets, we have another target up here at 165 and then 166. So, nothing to complain about with SMH. Some of these others, you had LRCX, which is pretty close to making that new high. Really strong move after earnings, but Taiwan Semi fell after earnings and is trying to recover. Hasn't quite filled the gap yet, but we've had a little bit of mixed results here, right? We still have Nvidia that is looking very strong onwards and upwards to the path of 500. So that brings me back to AMD. What do we do with it? Now, when you're looking at this company, first, I just want to start off by saying, it had a massive run that culminated in this high here at 164. But along the way, you can see that the earnings results have been up, they've been down. These bubbles indicate which direction the overnight gap is. So last quarter, we had a gap lower, 7.1%. Before that, 4.4, 5.6, 4.5. So it's, half the time gap lower, half the time gap higher. So as far as, making a directional call post earnings, that is what would lead me to say I'm going to bet on it in a neutral manner, because even though they beat estimates 14 out of 15 quarters, you can see that even though they've been beating, there's been times where they've really gotten hit. So all that being said, then you have to look at the current price action. The current price action is pretty similar to what happened last quarter. You can see the way that it traded lower. Even after this gap down, you just had this monstrous move higher. Pretty sure that was on some AI news, but I'd have to go back and check on the exact date. But if I remember correctly, gapped lower, and then there was some news that came out, and that's why it ended up rallying. So at this point, we're right above a critical zone of support around 105, 106. You can see that you have a really nice looking daily squeeze. And I'm a little bit back and forth on this squeeze, because on one hand, you've broken down below a critical support zone. Okay. The squeeze is normally going to fire in the direction of the trend. The trend has really started breaking down. So that's kind of one vote to the downside. But then when you look at this squeeze, we had lower momentum, and you see how it's starting to turn yellow. That momentum can easily hook to the upside and fire long. So where does this leave us for earnings? Well, as you have heard, I don't have conviction one way or another on the actual gap itself. So when that occurs, what I do is I look for a neutral trade that I can do. Now, on this earnings move, we have a market maker expected move of about $8. That's going to lead you into about 106 or 122. Now, as you can see, that's also where we have a lot of support and a lot of resistance. So it's reasonable for this stock to stay within that zone. Now, if there's a big surprise to the downside and it ends up breaking here, that's where it could fall like a rock. So if you're long, or if you're neutral and it breaks 106 and a half, it can easily fall like a rock. If the report comes out and it's great and it's up above, 122, that's where it could really keep rallying. So these are the zones to watch outside of a neutral move. A lot of the times, if I'm looking at something and I say, I'm not really loving it one direction or another, let's just wait till after earnings, then we can trade this daily squeeze. That's definitely something that you can do as well. But if you want to make an overnight neutral trade, you have an opportunity here because the implied volatility is pretty high. So if you're comparing implied volatility, you can see this week it is at 97%. You have 70, 62, 59%. So obviously this one is the highest. You can also see it on this chart right here, where you can see that the implied volatility is at the highest point that it's been all quarter. If you go back and you compare last quarter, you can see the way that the implied volatility spiked and then it rolled over. So that's what we're looking for this quarter as well. So when you do something neutral, you're really just trying to trade that implied volatility and your lack of a conviction in one direction, or another on a move. Now, with AMD, it's trading right around 115. I'd have to see tomorrow, exactly where it's trading before I would place any trade, usually around 2:30 or so Central Time. But let's pretend it was trading right at 115. That's perfect. You have all this volume and open interest there. So that's usually a pretty good strike to sell. So what I like to do is I like to come in and I like to set up a neutral trade where I can just, sell it today and then work on buying it back the day after. So, you have a couple different options here. You could do it $10 wide where you're selling the 115s and then you're buying the 125 calls and buying the 105 puts. That would give you a $10 wide area of risk. Since you're collecting a premium of $6.60 for a $10 wide risk parameter trade here, your max loss is only $340 a contract. So you're selling the premium, you have the opportunity to collect all that premium, but the idea is, sell 660 tomorrow, buy it back the next day for, I don't know, 485, maybe $5 for an overnight earnings trade. So, you're not trying to target the full 660, but you do have an optimal risk to reward where you're essentially risking one to make almost two, not quite. But so this is what I would do with AMD. You can widen it out a little bit more if you want to make your break even price a little bit farther away. You could do 781. That way you would match your market maker expected move. In that instance, for widening it out, your break even is going to be a little bit higher and lower, but your risk to reward is going to be closer to 1-to-1, instead of 1-to-2. So that is my idea for AMD. Now that's just an overnight earnings trade. After earnings is over, that's, not something that I would get into. I would actually just focus on looking at a post earnings trade in AMD with this squeeze. So if you have any other questions, join me in the options room. You can also send me a message on Twitter at Trader Danielle. That's TRADER Danielle. Other than that, I hope you have a great rest of your day, and I will see you in the next one.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe and also give us a like and comment down below. If you want to learn more about us and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com where you can join us for more info. Thank you very much and have a great day.